Good evening, all. Ira Epstein with your Spider ETF video, and this wrap-up is for what? It is Thursday, the 17th of March 2022, and the beginning of March Madness. Since 1 o'clock, it's been on my TV. I'm worn out already. My legs hurt from all the court running that I'm doing up and down. But it certainly should have an impact on what? BETZ. Remember that. That's your betting stock. So we'll see what that can do and as to how that draws it. Now, before I go any further, we didn't have a live webinar this week. I'll probably do one next week for everybody. I want to get my feet back on the ground after taking off a week. I want to change the first stock of Lockheed Martin. It's my last call. Write to me on the Facebook page. And is it Facebook? I think it's YouTube. Write to me on the YouTube page so that I know what you want me to cover. And then what I'll do is I'll look and see what's hot in the market, what makes sense. A number of you have done it. It's not that I'm not going to use what you wrote me. I'm giving a last call on it. It's that simple. Now, the other event that's taking place. I mentioned yesterday what I think is very realistic. The event of interest rates ended yesterday. In what sense? In the sense that now there's a known. We're going to have interest rate hikes supposedly through 2023, a good chunk of it. We're going to see very shortly the beginning of the balance sheet runoff. That's coming. The Fed thinks that the current financial numbers for employment are good. If you saw today, the unemployment numbers, the weeklies, they were great. They're falling in the right direction. They think that the economy is still strong. Did you see the housing numbers today? Oh my gosh. We are talking best numbers in, since 2006. Did you see the Philly Fed? Their report, unbelievably strong. I can't argue with the Fed. My argument is that now that they've begun the rate increases, there's a time delay. It's going to start creeping through business. It's not going to hurt us probably between now and the early summer as people go outdoors. To go outdoors and dine in a great part of America, you hire the summer help. You want to keep the people there. Business expands a bit. It's going to be later in the summer where this starts to be felt, especially as the help gets let go at the end of the summer. And I know we're just into spring. I'm ahead of myself, but you got to look forward. And at that point is where I think the problems will be. Does it mean it's clear sailing? Not at all. Lockheed yesterday fell in again, but I was looking for the market anyways to not stay over the upper Bollinger Band top. Only 5% of the time does the market get over the black line. Only 5. Trades outside or below. That's a 5% total, not 5% to the top and 5% to the bottom. And that's what the market has basically done. Also, what happened in Lockheed, here's the approach to the market. This is a weekly chart. This is what happened. On March 17th, you are losing right now the embedded reading. If it stays lost, where do you think I think prices are headed on this chart? Right there. Still be in a bull market potentially because that 18-week average is going to jump a little bit when they reopen next week, but that could be where the target's going to be. When I look at a daily chart of it, this is not a pretty looking chart. This has now got higher lows. Lower highs, lower lows. It didn't sound right. I got it wrong. The battleground, 18-day average, I can see that, but I just showed you on the weekly chart, you can still do a lot of dropping, which means if that's the case on the weekly, I think you have what's called a live number on the lower Bollinger Band that as long as this market doesn't get back over 450.42, that potential lies strong for that lower number, in my opinion, and momentum is down. So I see the trend down, the bias down. You have to rethink being bearish if you get back over 450.42, and if that doesn't occur, probably the 400, 390 level, something to be looking at. Apple is back into the resistance, but more important, the market was just down to another buy zone. When it got down here, you do remember, I keep saying, I'm Jekyll, I'm Hyde. The Jekyll guy is buying for the long term, not the Hyde guy. I want to sell the market on rallies, and he did. Hyde was selling and coming out. Now, you get down to this number, what happens? Again, the hide guys back out and going, you know something? If it was good there once before, it's good there again. You can see what's going on. It's because it's the 200-day average, which represents almost a year's worth of trading, along with the Bollinger Band in an oversold market at that point that attracts that type of trader. They're also not interested in coming out at that 18-day average. These are the people that think 200 is the logical number. I understand it. I understand what investing is, and I certainly understand the trading aspect of a market. XLF in an uptrend, but overbought, up and away you go. So the financial sector is so far going, yeah, Fed, jam those rates. I'm a bit not in that camp completely, because if you get an inversion traditionally of the 2 and the 10 year, that hasn't been really good for bank stocks. That means the short-term rates are, you gotta, as a bank, you're taking in money, and in theory, the word is theory, you're paying way higher to attract deposits, but you can't lend that money out at the high rate that you had because you got the inversion, and that hurts. Right now, the market's looking through that and saying, I'm good. Well, the bull market, part of it, wasn't alive here. It came alive yesterday. Did it fall back to challenge the 18-day average? No, this is the 200. That should be pretty stiff resistance. If not, then you have the 100 and the upper Bollinger Band. Am I bearish? Most certainly not. Why? Higher lows, higher highs. And the market's churning away, overbought. I would bet that the last part of the market ends right there in this particular run. We'll see if I'm right or wrong. Disney, what was the word that I've been saying to you each day? I said that if energies fell as much as they did, $138, $140 crude, down to $97. Now think of what that does in all the products, jet fuel and the like. That's going to give you a bounce in the JETS, J-E-T-S, ETF, and probably in some of the Marriott's, the Hilton. You understand what I'm saying? Anything to do with that. Plus, spring is coming, so you're going to get a certain amount of good news. Well, that's what we're at. Now, the big test for all these markets is going to be the 18-day average of closes, where I expect resistance. I think the industrial sector, XLI, I think it's going to fail on this rally. Right here to the 200 and the 100-day average. The trend has been up. My traders know that in my morning subscriber video. I have certainly been on the long side of telling them that. And you're now at areas where I think the pros are going to take money off the table. Semiconductors. Okay. Each time in looking back that they've hit the lower Bollinger Band, you've bounced away. Do you disagree? If you do, write me about it, because that's not been the case. Since the beginning of the year, this is pretty much how it's worked. Are we in an uptrend? No. But we're no longer in a downtrend. That ended, because you were in a downtrend, right there when you hit the Bollinger Band and you didn't embed, and it was confirmed it was over when you got back over the high right here and closed over the 18-day average, okay? But I do think the pros were able to nail that one and take their money. I think they're now on the sideline. I think that they're deciding, do they want to be bullish or bearish? This weekend's going to be super important on my subscriber video, the Saturday videos that I'm going to put out when I review just weekly charts. You're going to want to see that. It's going to be super important. In the home builders, did you see today's NAHB numbers, National Association of Home Builders? These are the best numbers since what, 2006? Powerful. And, you know, I walked by yesterday. I was looking in the window of some of the real estate companies around my area where I live. Just my wife and I went walking for an ice cream. It was so gorgeous. And walking through there, and we're looking at the prices. I mean, this is expensive stuff. I live in Chicago. There's many more expensive areas than Chicago. But, whoa. And as fast as they're still coming on the market, they're going. And if you look into my neighborhood, you know, Springs here, you normally get a lot of for sale signs. I'm not seeing them. When we look at the energy sector, lower highs, lower lows, just sort of hanging at the 18-day average, trying to figure out what to do. Gold. This doesn't look to me like a good inflationary market. This is a market that had a vertical price break and needs to figure out what it wants to do next. Is it a short sale at 181 with a stop over 187.38? In theory, it could be. Looking to get back, though, to a new low of 173.88? I don't think so. So I think the pros, I think they're saying, you know, I'm not convinced we're going to go down that far in the market. There still is inflation. It's here. It's not going anywhere. There could be a surprise for us out of the Ukraine war with Russia. We don't know that it won't spread at some point into a NATO country by accident. There's so many unknowns, very hard. So I get that the gold market gave up the rally that began right back here and culminated with a break, but I'm not convinced that it's a bear market of any length. Gold miners, they need to see the gold stocks go up in order for these charts to come alive. What they are saying is they don't want to stay bearish. They don't want to be bearish. Did we get any closes under the 18-day average? No. This was a correction in an otherwise bullish market overall. Copper is saying, I don't want to stay down. There's no reason for me to. It missed hitting the lower Bollinger Band, but that's all that it's done. I think it needs time to get its chart tighter, and from there we'll be able to make some trading decisions. Then we get to TLT and the others. How could I be anything but bearish? You have an embedded reading. Why would I be bullish? Let the red line close over 21, and my other personality comes out and says, you can't be bearish right now. But until that occurs, Then we get to the dollar. So here's the dollar rallying into the Fed thinking, okay, and it's a complete failure. Once you lose the embedded reading, you tell me where you're going on this chart. Take my enhanced Bollinger Band course, because the odds are you're going back to wherever that 18-day average is, and that's exactly what you did. It's now regroup time for that market. Last, in the euro, you turned actually bullish on the close today. So until this market takes out 101.37, which isn't that far away, but it's still $1.50, this is very much a live number on the upside. I'll be watching that to see what it does. And as you know, I talk the spiders, the ETFs, but I'm also talking in the morning individual stocks. So I watch Apple, I watch ARK. I should bring ARK back on. They've been having a little bit of a bump in the market. We've been covering, as you know, Lockheed. We're going to get rid of that and cover others. Some of you want me to cover some metal stocks. Maybe we'll do that. We're going to take a look. And each Saturday, I go through, as I just said, the whole litany of all this on weekly charts, the bigger picture. For a lot of traders, they want that. They don't want the in and out stuff. They're more interested. Give me a trade that I can hold on for a little bit. Okay, I think I'm a seasoned pro. I think I can give you and read a chart as good as anyone in the industry. I bring to you technical and fundamental news in each one of my videos, and I think that's important to get your day going. So how do you see this? It's so simple. Just go to our website, go under the word research, and enjoy yourself. I'm Ira Epstein. You have a good day.